Hey everybody, how you doing today? It's Uncle Bruce here with Stock Markets with Bruce. How are you today? It's the 13th of February, 2021, and I thought today I would do a video for you guys to, in plain English, try to explain to you how some of the best traders in the world make money in the markets. Thank you for joining this channel, Stock Markets with Bruce, subscribing, giving my videos thumbs up, so I really appreciate it. Look, kids, this is the Big Apple here, and it is such a great place. They named it twice, New York, New York. If you can make it here, you can make it anywhere. And let me tell you, some of the brightest minds in the finance business live, work, and play here. And you got to be good if you're going to stick around a while, because to live in this town and work in this town, you got to know how to make some money. There are people here who are making millions a year. They work a few years for a firm or two, and then they go out on their own and become consultants and become even richer. All kinds of success stories have been born here, but there have also been some spectacular failures. And the trick here is not to be a loser, but to be a winner. And I've got a few strategies for you that I'm going to talk to you about in this video to help you be a smarter trader. Whether you want to be a short-term day kind of trader, or you want to be an investor for the short, medium term, or even if you want to be a long-term investor, there are certain things that these professionals do to help ensure that they limit their losses, maximize their gains, and stick around a while. Because in this business, the competition is fierce. The equipment that these people use is the state of the art. The research they have at their fingertips is the best in the business. But they still have to know when to buy, when to sell, when to hold to maximize profits for their clients and ultimately for their own personal paychecks. When you are at home thinking about buying and selling stock, you've got to understand that you're up against people like this guy. They're around the world, by the way. This fellow, I think, is in Germany. They have the state-of-the-art machines in front of them, all those screens, newspapers, research, telephones. They can reach all of their clients around the world in a nanosecond, and they have got the ability to trade a lot faster than you and I have. Plus, of course, they have access, or they'll help program algorithmic computers to do trades. You've got to know some of the basic tools that these people have at their disposal. And even a gentleman like this might even remind you of yourself, with the kid jumping up and down on the bed in the background, you can trade in the market too, and you can employ some of the basic rules of trading that the hedge fund people and desk traders, pro traders use to, in effect, match up with them and limit your downside and maximize your upside. You can also employ the rules. I'm going to talk to you about these tricks right off your phone. Even if you're trading off your telephone, you can still use the tricks I'm going to talk to you about. Here's the first one right here. The first thing you have to learn is a limit buy order. Normally people just want to buy stock. They put in a market buy order and buy the stock. Well, you don't have to do that, and a lot of the professionals out there don't do that. Here's a story about Virgin Group Acquisition Corp, VGAC. It's a SPAC. Company went public at about $10 a share. They came out with an announcement just a couple of days ago that shot their stock over $18 a share. Would have been a nice trade, but I found out about the story like everyone else, and the shares began to fall, and I thought to myself, they were around that 14 mark before the announcement, maybe even the 12 mark. Maybe they can reach back to the 14 mark, and that's where I could get in. If I were a trader, I'd be looking to get into the stock in the low 14s, and that's when you put in a limit buy order. You tell your broker you want to buy 100 shares, whatever it is, at $14.02 a share, not $14, but $14.02 or $14.03. When the market backs off, it might not reach 14, but it might reach $14.02.03 because you cut in line and got in first. But then on the other side, a limit sell order is another trick these guys use. First, they cut in line in front of you because you're trying to buy it at 14, that nice round number, and you never got it. They bought it $14.02, $14.03. Here's a deal on Bed Bath & Beyond. This stock just a few weeks ago was as high as $54+. Then it crapped out. And down where that arrow is right now is where you want to buy it, because sometimes they drop too far too fast and there's a trading opportunity on the other side of a pop. And you put in a limit buy order and then you put in a limit sell order to take advantage of this kind of a trade right here. You offer the stock at a couple of pennies below $30 a share. There are a lot of sellers at 30. You put it in at $29.94, $29.97. And like this gal right here, you'll be smiling in no time, because if the shares pop and they try to reach 30 and they can't quite do it, the likelihood is that they may have topped out at $29.97 or $29.98, and that's where you were, and you got out first. Of course, the stock could have gone higher than 30, but these round numbers attract a lot of sellers. You've got to be on your ball. Here's your third trick: stop loss order. You've got stock. You love the company. You love the stock, but you want to be protected against making a mistake that the market goes badly on you. Here's a typical strategy showing where someone buys the stock on the top line, they follow it, and then below it they put in stop loss orders, where in effect if the market backs off too much, you're automatically sold out and you've limited your losses. But as the market goes up, you can play this strategy. You keep changing your stop loss order, raising it as the stock goes up, and when the shares do top out and back off, you're out at the high. And you're not doing what this guy's doing, going, why was I so damn stupid and greedy? I bought the stock at $15, and I could have put in stop losses at $16, and then $16.50, and then $17.25, and $17.75. It went up to $18.50. I could have had a stop loss in there at $18.03, and it came back to $15 a share. I could have got out at the $18.03, locked in a profit, and I lost everything because it came back to $15 a share. And you end up holding your head in your hands and wondering, why am I in this business? And you head home amongst the millions of others. Some of these folks are going home, they're smiling because they used the simple 3 strategies to protect their investment, to catch the best price of the day, to not be too greedy on the way out and get out below a nice round number. And also they employed stop loss orders to protect against a mistake. It's not uncommon where people will buy a stock at $70 a share thinking it'll go to 100. They put in a stop loss at 66 just in case they're wrong. The stock backs off to 62. They're out at 66. And then they sit back and go, well, I still like the story, but I'll wait for it to stabilize and then I'll get in again. But I might get in the second time at 64 with a $61 stop loss. And if it then goes to 70.75, I move my stop loss order up to 71.72. And if it goes to 100, I'll have a stop loss at 95. It goes back to 95. I'm out and I made a profit. Strategies that all these pros use that now you can use yourself. Hope you found this interesting. I hope you found it helpful. And let me know with a comment what your thoughts are on these strategies. Take care, everybody. Bye for now.